There is this very interesting ceiling across many asset classes within crypto. So it seems like for whatever reason, we can't really get beyond a certain ceiling, and that's true for the altcoin market as a whole. It's also true for many other assets. So what we see over here, that's total 3ES, so the entire crypto market, excluding Bitcoin, excluding Ethereum, and also excluding the stable coins. So we look at all of the risk on assets. They're not Bitcoin and Ethereum. And for whatever reason, right, for the last 4 to 5 years, we were not able to exceed that market cap beyond this line here, right? 950 billion. When we look at a slightly different metric, so that's the others market cap, that's all of the altcoins that are not in the top 10. So that's the smaller altcoins, not just altcoins in general. That seems to not have exceeded 450 billion. When we look at Ethereum, we've got the same picture, right? It can't exceed 480 billion. So for whatever reason, different asset classes, we've got the same for Solana, by the way, can't really exceed this ceiling. At some point, people take profit. Have a look at the following. This is Solana's market cap. Here, the ceiling isn't as obvious, right? Here, the tops align, and over time, this tends to go up. But with the recent bear market, it also sells off. It sells off more than Bitcoin and Ethereum. I've actually prepared a video for that. This will be published in roughly 12 hours. And over here, we've got Bitcoin long term. So the altcoins, they're simply stuck. Ethereum is simply stuck. Solana was able to outperform slightly. Bitcoin was able to outperform the most, right? Bitcoin was able to create new all-time highs. But the interesting thing is that once we look at Bitcoin relative to other asset classes, this outperformance suddenly goes away as well. We might consider that maybe Bitcoin is outperforming because it has all the purchases through the ETFs and through the treasury companies. But really what I think is simply that risk on assets tended to do well, and all the other assets within crypto, they didn't reach new all-time highs because it simply got too much selling pressure in the meantime. Bitcoin is still getting held by a lot of long-term holders. Ethereum, not necessarily so. So have a look at the following. This is Bitcoin relative to USM2. So relative to the US money supply. And in the past, from one bull market top to the next bull market top, we had hundreds, potentially even thousands of percent of return. That has already diminished massively from 2017 to 2021. Here we had only 140% of outperformance relative to USM2. The outperformance even declined further the last 5 years. Here we've got only roughly 60% outperformance. Still a higher high, but it is definitely diminishing quite a lot, especially measured versus USM2. But now measure Bitcoin relative to the Nasdaq 100. So this is now Bitcoin measured as another risk on asset. Here we really have pretty much no growth at all. So the new high that we got in May of 2025, it almost perfectly aligns with the high in March of 2021. Yes, we could argue that there's maybe still a bit of gains to be made, 12% outperformance of Bitcoin relative to the Nasdaq 100. But is that outperformance really worth it when it crashes by 71%? The outperformance is only worth it if you're willing to time the market, right? If you're willing to buy low and potentially sell off high, to try to time the market using, say, the realized price or using the net unrealized profit and loss, using some kind of cycle indicator, then of course volatility is good. But if you're just buying and holding, if you're a hodler, then it's not necessarily that great that we get that little outperformance as a risk on asset relative to, say, the Nasdaq 100, right? We do not want to have that much more potential downside for that little additional upside. So that's the potential problem that we face with Bitcoin long term. The returns are not just diminishing in US dollars, the returns are diminishing even more relative to other risk on assets. And why does this matter? It matters because Bitcoin tends to move in the same direction as other risk on assets at the same time. So we've got Bitcoin at the top, we've got the Nasdaq 100 at the bottom. They both had the COVID crash, they both had the COVID recovery. They both then went into a bear market at very similar points in time. They both also bottomed at the same time. And the only difference that we see now is recently a slight decoupling in the way that the Nasdaq 100 didn't really move much, while Bitcoin, of course, is on its merry way down because the long-term holders started this negative momentum and then the short-term holders had to capitulate. But in general, right, Bitcoin is still traded as a risk-on asset. It's much more correlated with the Nasdaq 100 than it is with gold, for example. And because of that, the outperformance versus another risk-on asset matters so much.